Hey everyone, John Henry here from School of Trade. Today we're going to be taking a look at a long setup here on crude oil. We're coming off of the channel lows. Very nice area to be looking to become a buyer. So I'm going to get my stop underneath here, and I'm looking towards the upside. Now, the channel lows that we're buying at the moment, right? Very obvious, draw point A to point B, and we have a nice little bounce right there off point C. And we can see that the market is respecting that channel very, very well. This is the first time in a while that we've come back to retest this low, and we get a beautiful signal to jump on board with it. The only thing is, normally when you're looking to buy a channel low, you want to buy the channel low to ride it to the channel highs, and then buy the lows and ride it to the highs, etc. The problem with that this time around is we got a little bit exhausted up here at the top. You can see a massive amount of wick up here, and we kind of up angled, right? Now, if you kind of draw a line from the tops here, you can see where they just sped up. A lot of times when you get that type of exhaustive movement, the market will not very likely come all the way back up to those highs of the channel anymore. Instead, they're just going to go back up to the last place the buyers were seen, and that happens to be right there. So on this candle's close right there, that's the last place that we saw the buyers attempt anything, so that is going to be the target. So I'm going to drop my target right there, and we'll put 3 there. So 43.56 is the objective towards the upside. Now, the big thing here, even though we do have a slight uptrend, we have to zoom out a little bit and understand that even though we do have an uptrend, the bigger picture is really much more range bound. We started in the early morning with a move up and then down, and then up, and then we're probably eventually going to come down again. So we need to understand the fact that, well, if we're anticipating this coming back down on us and we have an exhaustive type move on the top, we're probably not going to get that drive all the way to the highs. So instead, I'm looking to be a little more conservative, take my profit at 56, and I think that kind of is a nice medium ground. If you want to try to take a little bit of a bigger target like a runner, maybe take 80 to 90% off at that 56 area and then hold the rest, but to each their own in that situation. So we're in long at 37, looking for 56. Seeing the buyers attempting to come in one more time here. We came one tick away from our target on the last candle here, so I locked my stop in underneath it because I don't want to give that much back, but I still want to try to give it room just in case something like this happens where it goes all the way back up to your target. So instead of exiting early, I'm going to lock my stop in a little bit closer. So stop is at 43.43, still looking for that 43.56. Nice follow through. We're getting the buyers jumping on board here, but again, I'm expecting the move to start drying up around this 56 area. It may still continue and make a big old huge bull leg up, but generally speaking, most of the time when this type of movement happens, you don't get that. So we're out of the move, got the target filled at the highs there, and a beautiful little bounce off of that channel low. So gorgeous play off of the channel lows. Again, being a little bit more conservative, seeing the context of the situation here with that rounded upward movement, getting a little bit parabolic. So because of that, we're going to take the profit a little bit sooner and call it a day. So that's going to do it for me. If you have any questions about it, feel free to send an email to School of Trade. Don't forget to check out our trial at schooloftrade.com. And as always, we'll catch you next time.